Welcome, everybody. Thank you for joining. We have a great session ahead of us here about crowdfunding. My name is Shane. I run the events over at 10 Capital. We have Jonny Price from Wefunder with us today, so we're very happy and excited to have you, Jonny. We have our CEO, Hall, also be moderating our session today. So, Hall, if you want to go ahead and take it from there.
Great, thanks, Shane. And Jonny, thank you for joining us today. Glad to see you here with us. You're the VP of Fundraising at Wefunder, and maybe you can tell us a little bit more about yourself and your company.
Yeah, absolutely. Thanks for the invite. Pleasure to be here. I work for a company called Wefunder. I'm from the UK originally. Started my career in management consulting for my sins. Then went to work for a nonprofit called Kiva.org in San Francisco. Founded their US team. We were doing crowdfunded microloans for entrepreneurs. Ran that team for 7 years, and then in early 2018 joined Wefunder, and I've been running our growth team for the 4 years since then. What Wefunder is all about is basically making it easier for startup founders to raise capital. We do that by enabling them to run a fundraising round with us, where they can not just raise from accredited investors, angel investors, not just raise from institutions like VCs, but they can also raise from unaccredited investors, from their customers and community, their LinkedIn connections, and they can also publicly promote and market the fundraise. So normally when you're fundraising, you're limited to kind of private solicitation of accredited investors. And so what Wefunder is all about is using this thing called the internet, or social media, to send in, a marketing message out there, or kind of, send an email blast to thousands of people. You can put out a press release, go on a podcast, a webinar like this one. And so just trying to make it easier for founders to get the word out, so that, it's easier for them to raise money.
Great. So, the title of this presentation is Tips for a Successful Crowdfunding Raise. So we're looking to pick your brain on what's going to be the best fit for it, and how can one be successful with it. So the first question is, what companies do well on crowdfunding?
Yeah, honestly, a lot of companies. We have a pretty eclectic group of companies on Wefunder. The minimum raise on the platform is 50K. The maximum is 5 million. Actually, technically, you can raise even more than that. We've had some companies raise 9, 10 million, even more. But generally, the range we say is 50K to 5 million. And so, that could be a coffee shop that's, raising 70K for some renovations from their customer base locally. It could be a very early stage startup that's basically doing a friends and family around in a more kind of, streamlined and systematized way, all the way through to a company that's, doing a Series B and raising $50 million, and they allocate 10% of that, $5 million, to their customers, as well as 45 million from VCs. So it kind of spans the spectrum of stages of a startup, and then industry-wise as well. As I mentioned, we're doing Main Street businesses, coffee shops, restaurants, breweries, and distilleries. And then we're doing tech startups, SaaS companies, consumer apps, biotech companies. We've had movies raised on Wefunder. So it really is, kind of many different types of companies can have success with us. I think, the companies that are going to find it easiest to raise capital are, firstly, companies that obviously are, good investment opportunities. So the faster your growth rate, the better, stronger your team, the better your product, et cetera, the things that any investor will look for. Obviously, if you're kind of more investable, you're going to do better on Wefunder. And then the second thing is around kind of the audience size, right? So if you're a consumer-facing company with an audience of 50,000 people, then when you tell them, hey, we're live, you can invest in us, you can go from being a customer to being an owner of our company, then a lot of those people hopefully will click on the link and go and invest. So they have this built-in audience that they can market the campaign to. So, large consumer-facing companies with big audiences are certainly the sweet spot. But, as I mentioned earlier, we've also got many millions of dollars to very early stage B2B companies as well.
And what's the key to running a successful crowdfunding campaign? What are all those companies doing right that leads them to a good fundraise outcome?
Yeah, well, probably, yeah, the most important thing is like have a great company, right? So that's easier said than done. It's not like you can just check that one off the to-do list. But obviously, again, as with all fundraising, the stronger your company, the easier it's going to be to fundraise, right? So with that aside, it's kind of a given. What makes a great campaign? Obviously a great page, where the story is very clear, it's very polished. And it's not just kind of marketing polish, right? But you're also emphasizing the things that are going to grab investors' attention, right? So if you have an amazing team of PhDs from Harvard, right, then maybe you kind of emphasize that prominently on the campaign page. If you have a growth rate that's just exploding, maybe you emphasize that, right? If you have a beautiful product, then okay, let's have some product demos, maybe a Loom video of a product demo as kind of central to the pitch in the campaign page. So kind of step one is like amazing campaign page, and then step two, setting the terms right. So what are you raising on? Are you raising on a safe convertible note, a price down? What's the valuation? Do you have a lead investor who's kind of investing a meaningful amount and helping set the terms that other investors can look to them and say, okay, well, Hall's putting 50K in on this 5 million cap safe note. Okay, cool. Like I trust Hall. I'll follow his lead. So that's kind of investment structure. And then the fundraising plan, obviously, our team will help founders put that together. But as with all fundraising, there's a lot of hustle involved. There's a lot of outreach to potential investors, a lot of meetings, a lot of phone calls. One of the cool things about Wefunder is I think we can kind of help reduce the amount of time that founders spend fundraising, because rather than regurgitating that same pitch over and over again, people can go to the website, watch the video, right? So hopefully it's streamlining it. But still, like if you want to raise $1 million, generally you're looking at a lot of hustle, a lot of outreach, a lot of meetings, and so putting together that plan, and then executing on the plan and hustling, and you get out what you put in, right? So are you willing to send those emails, like put out those press releases, engage with social as investors are coming in, engaging with them, trying to get them to share the campaign with their network. So we have very rich guides around what kind of fundraising tactics work well. But the general rule is, right, like make the plan and then execute and hustle, and kind of the more momentum you can build up early in the campaign to try to get that buzz going early, and then you get that flywheel going, and then hopefully.
Great. And so what companies don't do well on crowdfunding and why?
Yeah, I think probably the number one is like companies that aren't good investments, right? So if it's a tech company that's like not growing at all, you're going to struggle to raise money from investors, right? So then sometimes a company, if they're struggling to raise from investors, they might come to Wefunder and hope that the crowd investors will invest when the kind of a regular angel investor wouldn't, and that's usually tough. I do think we can kind of push the edges, right? So one of the things we're trying to do at Wefunder is make it easier for founders to raise capital. But at the end of the day, if you don't have an investable company, you're probably also going to struggle to raise on Wefunder. That's probably the most important one. And then secondly, kind of founders that don't really want to put in the effort. So think that, we'll just go up on Wefunder and watch the $500,000 roll in. No, usually you really gotta put in the effort and the hustle, and again, you get out what you put in there.
Great. We have a question from the audience. We'll go ahead and take it. Oh, by the way, Jonny, if you move your position, your voice cuts out or the audio cuts out. So if you could be close to the mic, that would help. But the question is, what is the sweet spot for a raise amount that you found to be most achievable?
Yeah, the average raise, I just changed my microphone, so hopefully that'll be a bit better. Sorry about that.
That's great. Thanks.
Average raise on Wefunder is about 400 grand. So the median is probably a little less than that, maybe 250, 300 grand. So that's kind of the sweet spot. But obviously that varies massively between companies. So Mercury Bank just raised $5 million on Wefunder in a few hours, right? They raised a 120 million Series B and then raised an additional 5 million at the end, just for their customers. They didn't want it promoted on Wefunder. They only wanted to let their customers invest. And when they shared it with their customers, they raised $5 million in a few hours. So I wouldn't kind of really see it as like the sweet spot on Wefunder. I would say like what's a good amount for your startup. But again, the range is 50K to 5 million, and the average is 400K.
Great. So the next one's a bit involved, but can you talk about the marketing of the Wefunder campaign in terms of how much needs to be raised before the campaign can go public? And if it's not public, unsolicited, can you post it on LinkedIn, other social media platforms, since the people following you are first degree connections?
Yeah, absolutely. So Wefunder's now raised about $400 million for startups since we were founded. And on average, about 1/3 of that is coming from existing Wefunder investors. So people that we promote your campaign to, and they made an investment last week, and then they come back and make another one. They made an investment last year and come back and make a fifth investment, sixth, etc. So 1/3 coming from people we bring, and then 2/3 coming from first-time investors. Now that is both angel investors that you're pitching, or kind of your close like connections that you have strong relationships with that you're pitching. It also might be your customers or your kind of more peripheral LinkedIn connections. It also might be people that you don't necessarily know, but what Wefunder allows you to do by enabling you to market your campaign, you can get the word out to people that don't know you as the founder, have never heard of your company before, but are somehow, maybe one of your investors shares it on their LinkedIn. And so now you're able to get the campaign in front of their network as well. And so the point is that the 2/3 of first-time investors on Wefunder isn't necessarily people in your first degree network. Probably a lot of that is coming from people in your first degree network. The first 50K is entirely from first-time investors on Wefunder. So we have hundreds of companies, and we have kind of our kind of bar to get exposure to our investors on our website is you get to 50K, and then once you get to 50K, then we kind of put you in our list of companies publicly on the website. So the first 50K is all you, and on average you should expect to bring about 2/3 from first-time investors and 1/3 coming from existing Wefunder investors. And then the second part of that question, what's really cool. So this is a little technical, but Wefunder uses this exemption called regulation crowdfunding. Normally startups are raising through Regulation D. In Regulation D, you are limited to raising from accredited investors only, and usually you're limited to privately soliciting investors that you have an existing relationship with. And with regulation crowdfunding, the two differences are firstly that you can raise from unaccredited investors as well as accredited investors. And then secondly, you can publicly promote. And so the really cool thing about regulation crowdfunding is, you can put it on LinkedIn. You can, go on, you can kind of, go on a webinar like this one. You can really market it. There are very few restrictions. You can't talk about the terms of the offering outside of the Wefunder platform, but everything else is kind of fair game. And so that ability to market the raise is really powerful, and one of the main ways in which we would argue we really hoping to make it easier here for founders to raise capital.
Great. So how popular or effective is promising a donor investor a product or a prize? How well does that work?
Yes, it's definitely an investor rather than a donor. So I think that's a difference from where I was before at Kiva, or like a GoFundMe or Kickstarter or Indiegogo, that kind of thing. So this is like investment crowdfunding. So investors are looking for a return here, right? And so the average Kickstarter pledge, for example, is $80. The average Wefunder investment is $1,000. So people are looking to make money. So definitely investors. And then, that being said, you can definitely offer perks to investors, right? So the main thing they're getting is usually equity in your company, but they can also get, like I invested in Chattanooga Football Club, which is a soccer club down in Chattanooga. This is another example of a different type of company that raised on Wefunder. I invested $125, and one of their perks was that they would put my name on their soccer jersey in tiny font on their soccer jersey, or if you're investing in a brewery, maybe you get, a discount when you go in behind the bar, or a discount on the product. So there are different perks. I think like how determinant they are or how important they are for driving investment volume obviously depends on the perk, right? So there are some where the value of the perk is really significant, and so maybe that's a huge driver of investment volume. There are others where it's a pretty small economic incentive, and so it's probably a smaller driver. And I'd say most companies on Wefunder probably are offering a perk, but you certainly don't have to. And yeah, the focus is really on the investment opportunity.
And what is the minimum an individual can invest on Wefunder, and can that be set?
Yep. So in an individual campaign, investors can invest between the minimum is usually $100. If you want to, as a founder running the campaign, you can set the minimum at $1,000, but generally the minimum is $100. And then from the investor perspective, everyone the SEC sets investor limits on what people can invest. Everyone can invest $2,200 per year. And then depending on your income and your wealth, there's a formula. I think it's 5% of your income or wealth, whichever is the greater number. And so you can invest that per year in all regulation crowdfunding offerings. So yeah, and the average investment I mentioned is $1,000. The median investment on Wefunder is $250. So pretty small investment amounts. One thing that's important to just point out is that we roll investors up to one line on the cap table. So from your perspective as a founder, logistically, it's pretty neat and simple. It's just one line on the cap table. The lead investor that you designate, who typically is investing 5% of the round. So if you're raising 500K, hopefully the lead investor is putting in at least 25K. But that lead investor is then voting for the shares of the individual investors. So again, it's kind of pretty straightforward and neat in terms of administration for the founder.
Great. Is the 50K required to come through Wefunder, or can it be invested off platform?
Yeah, with the 50K that we require to put you public on the site needs to come through Wefunder. If you've raised 50K from, let's say, angel investors previously in a Reg D, that's awesome. We can definitely count that towards the total. But in terms of kind of getting exposure to the Wefunder audience, the 50K needs to come through the Wefunder platform.
Is there a special or niche marketplace for ESG investments?
So within Wefunder, or I'm not sure if that's within Wefunder or another type of Wefunder equivalent platform that's just focused on ESG. If it's the second, I don't think so. If it's the first question, within Wefunder, we have tags. So if you go to our explore page, wefunder.com/explore, you can look at biotech companies. I don't know if we have an ESG tag or a sustainability tag, but you can certainly search for companies that have tagged themselves with ESG. I'll try to do that as we continue the conversation here, see if I can quickly search and see if there's a link there. But one thing to point out on that note, Wefunder is a B Corp and a public benefit corporation. So if you go to wefunder.com/PBC, put the link in the chat here, you can read our public benefit corporation charter. And so, yeah, we're pretty big on kind of ESG and sustainability, etc.
Cool. So what is the fee structure for Wefunder?
Yeah, so typically the founders are paying a fixed fee of 7.5% of the amount raised. So if you raise $1 million, we keep 75K and send you 925K. We don't have any fixed fees to launch a campaign. And we don't have any other fees ever. So it's a very kind of clear and transparent pricing policy. So that's how we make money.
Great. So must it be equity, or can they invest with safes, convertible debt, or other?
Yeah, we have probably about 30% of our of the money is in price rounds, straight equity price rounds. Probably about 30% is in convertible notes, and then 30% is in safes. And then we also have 10% in straight debt deals. So either an interest rate with a fixed interest rate, or we have this instrument called a revenue share, where companies are paying investors back a multiple on their investment as a percentage of their revenue. So maybe they pay 5% of revenue every quarter until they've paid off the 1.5x multiple on the loan. So different investment structures are definitely permitted. One thing we basically say is, Wefunder shouldn't be the one deciding what the investment structure that you're raising on looks like. You should be having that conversation with some of the early anchor investors that are going to come in, right? So obviously, if you're a tech startup, like maybe you would love to do a loan with a 3% interest rate, right? That would be pretty cheap capital for you, or raise money on a valuation of $500 million pre-revenue. That would be lovely. But obviously no investor is going to invest in that. And so that's where the role of the lead investor comes in, and kind of early conversations. And it's quite nice where you can just have these conversations with investors, try to triangulate and figure out, okay, what are terms that are going to work for me and for investors. Once we've kind of zeroed in on those, then we put those up on Wefunder and put it up to the crowd.
And so how do accredited investors invest in Wefunder outside of Reg CF? Is that possible?
We're really focused on regulation crowdfunding as opposed to regulation D. We've had some regulation A+ offerings as well, which are also open to unaccredited investors. If a startup maxes out on the $5 million, which is the annual limit that a startup can raise using regulation crowdfunding, then we can open up a parallel regulation D round, a 506C regulation D round, which allows for public solicitation. And so then accredited investors can keep investing in the regulation D. And so that's where, Immersed is an example of a company that, they raised 5 million in Reg CF, and then I think another 4 million from accredited investors in regulation D. So sometimes if a company goes over the 5 million cap, we can open up regulation D, but the vast majority of companies you see on Wefunder are within the $5 million regulation crowdfunding cap. And so, accredited investors can invest in Reg CF deals as well as unaccredited investors. About 50% of our investment volume on Wefunder is coming from accredited investors. But yeah, we do sometimes do some regulation D as an overrun to the 5 million Reg CF.
I get you. Okay. So how much time should they spend preparing their campaign before they launch on the platform?
Yeah. That's also probably, a little, how long is a piece of string? It varies significantly from company to company, depending on a bunch of things, like, how kind of, in a rush is the founder, and how confident they are, etc. I would say probably, 2 weeks in terms of kind of figuring out the marketing plan and the fundraising plan is a good amount of time. Probably if you're more conservative, could be longer than that. The other thing to note here is that I would always recommend, starting in private, right? So you put together the campaign page and you start to share it around with people, right? And you go to the people that are closest to you first, right? Where you're going to have a really high batting average. So my number one investor in Jonny's startup raising on Wefunder would be Jonny's mom, right? And so she's going to have 100% like guaranteed she's going to invest in me. And so you kind of go to people that are going to really invest and have a high batting average. And then over time, as you've kind of built the momentum and got a number of investors to come from your close network, then and usually I talk about a third of the round. So if you're looking at raising 600K, I think like best practice is ideally you're waiting till you've got to 200K from kind of your own outreach before you then do the big public big bang launch and marketing push. You don't have to follow that framework. But I think best practice would be to get a third of the way there in private and then push it. And obviously, the more you've raised in private, and that goes the same for the Wefunder investor push as well. The first time our investor base, we have over 1 million registered users now. The first time they see you, you want to have raised as much as possible. The first time our investor base sees you, you've raised $51,000. they're going to be a lot less interested to double click and watch the video and then invest than if the first time they've seen you've raised $500,000. So I think the longer you can wait to do that public push, it's attention, right? Because sometimes you need the marketing push in order to get the campaign going. But the longer you can try to wait and push it from your own network before the big marketing push, I think the better results you'll see from the first impression you get.
Great. So another question from the audience: to confirm what I thought I heard, there is no exclusive, right? That is, we can use Wefunder and other means if we choose. We have an ongoing round with low six figures already in. How can we leverage this to optimize our exposure, validation, et cetera?
Yeah, that's right. There's definitely no exclusivity. I think, you can either in series or parallel, right? So you can, if you've been raising from angels or friends and family rounds, what I would generally recommend, I'm slightly self-interested here, but I also think this is in the best interest of founders, is kind of basically say, okay, we're closing that down, and now going forward, we're directing our fundraising efforts to this Wefunder page. One, because I genuinely think that's going to be a more easy way for you to raise money, more streamlined, kind of less headache for you, one line on the cap table, etc. But also because the more you can concentrate the dollars in one place, and it's just good, right? Because it's contributing to the number on the platform. And we have an algorithm where we're looking at like investment velocity through Wefunder. So the more investment velocity you have, you're going to kind of tick up in our rankings. So there's some definite advantages to bringing that money in through Wefunder. You don't have to. You can keep raising from accredited investors in a Regulation D 506C side by side with Wefunder if you want to. One thing just to note there on the fees: if you bring an investment of $25,000 or more, then we actually waive the 7.5% fee on that investment. Otherwise, it's like, well, why am I paying Wefunder, $3.5 grand on this like 50K check? I'll just take that myself. So hence we waive the 7.5% fee on larger investments. So there's kind of less of a reason for you to kind of keep the kind of two raises going in parallel.
How long do most campaigns run? What's the average?
Probably 3 months or so, 3 or 4 months, something like that. There's no upper limit. So if you want to keep it going, you can. And yeah, sometimes, like I mentioned, it's millions of dollars in a day. But the average is about 3 months.
So what's the most important thing you should do before you launch your campaign? You were talking a little bit earlier, but just to confirm, what is that?
Sorry, say that again.
What is the most important thing one should do before launching the campaign? What's the critical factor there that you think some people miss?
I don't know. I think kind of going back to what I was saying earlier, the campaign page, I think getting the investment terms right is critical. And then, because I've seen many founders where they just launch with a valuation that's too high, and then they're kind of shooting themselves in the foot. And then I think marketing wise, I think the most common mistake I think I see is trying to go with the Facebook approach and like the mass marketing approach before you've kind of got your own people in, right? So it's like you got to start with people that right? And that are close to you. And what's cool about Wefunder is we enable you to raise from everyone in your network, not just accredited investors. But it's kind of like, how can you expect a stranger to invest in you if you can't even get people in your network to invest in you, people that hopefully trust you based on years of knowing you. And obviously sometimes founders, if it's a recent immigrant, they might not have people in their network, right? And so we can certainly help to overcome those challenges. You actually can have international investors invest as well. But generally speaking, it's like working your own network first, putting in the grind, doing the outreach, taking those meetings, calls, etc. And then as you're starting to build momentum up there, then opening it up more broadly.
So what should you be doing while you're running the campaign after it's launched and out there? What should you do at that point to keep it going?
Yeah, that's a challenge. Certainly, one thing you see with a lot of Wefunder campaigns is kind of a spike at the start, and then there's a deadline at the end of the campaign, and we have like a seconds ticking down on the website, which is a nice UI thing to drive urgency on the part of investors. And there's kind of a plateau in the middle, right? So how do you keep that momentum going in the middle is challenging, and that's where I think the hustle comes in, right? So keeping on outreaching to more investors, and maybe by this stage of the campaign you've already done the outreach to your own network, so maybe now you're reaching out to potential investors on LinkedIn, or you're experimenting with different marketing channels. Maybe you're reaching out to kind of podcasts or influencers to see if they will help market the campaign. One tactic that I think is very, very effective is kind of investor virality, right? So basically trying to leverage your investors. So hopefully by this point of the campaign, you have a few hundred investors, right? And you're trying to go from a few hundred to 1,000. And if you can turn your first 200, 300 investors into your marketing team, then that's phenomenally powerful, right? We haven't even talked about this yet, but I always say there's kind of two value propositions to founders of using Wefunder to raise capital. The first is, we help you raise more money more quickly. If you're struggling to raise from conventional investors, we can help you get there. So it's the money point, which is pretty important. But the Mercury example I gave, some more and more companies that we're seeing now, startups, they don't need the money. Like, this isn't about the money for them. This is about recruiting an army of brand ambassadors and champions and literally owners of your startup who are financially incentivized now to help you grow and win. So if you're hiring for a software engineer, they can share that job description with their network. Or if you're trying to get your CPG product on the shelves of Whole Foods, then maybe someone in your investor base knows a buyer at Whole Foods or is a buyer at Whole Foods. And then with respect to what I was just talking about, these 200 or 300 people, like, they're incentivized to help you win. What you need to help you win right now is to run a great Wefunder campaign, raise the money, get back to running the business, so that then they're incentivized to help you spread the word about their campaign. And it kind of makes them look cool on their LinkedIn if they're sharing, hey, I'm an angel investor in this company. And so hopefully it's a pretty easy ask to say, I would love for you to share this LinkedIn post I did, or share this video that we made of our pitch deck, whatever the marketing collateral is. And so trying to leverage investors as they come in, and maybe every week when you have new investors come in, sending an email from the founder, hey, thanks so much for investing in us. This is 2 or 3 ways you can help us right now. Would love to stay in touch, build a relationship. Thanks for believing in us. Kind of building that relationship, that community, and then ultimately leveraging them to help you get the word out.
Great. Anybody else in the audience have a question? Go ahead and post it. And my last question to you, Jonny, is what new things are coming up from Wefunder in 2022? What should we be looking for?
Yeah, so we're really excited, honestly, just kind of continuing the growth. So we've seen a lot of growth over the last year. The SEC made some rule changes to regulation crowdfunding in March 2021, where they increased the cap from 1 million to 5 million, and then allowed us to roll investors to one line on the cap table using an SPV. So that's driven a lot of growth for us, and we're just trying to kind of keep that growth going in 2022. We have a lot of very, very high quality companies in the pipeline that we're really, really excited about. Companies like Mercury or Levels is another one where, it's kind of like raise millions of dollars in a day kind of thing. And so we just think this just bodes very well for the future of Wefunder and the whole industry at large.
Are there any regulatory changes that are brewing that might come up in the near future?
No, I don't think so. The SEC kind of always, exploring accreditation laws and whether it might be easier for investors to become accredited. But I think probably the big changes to regulation crowdfunding we enjoyed in March of last year, and so it'll probably be a while before there are any additional updates. But 2 years ago it was $1 million that you could raise per year. Now it's 5 million, so it was a huge step up. So yeah, we were really delighted with those changes.
Great. Any other questions from the audience? If not, we'll start to wind it down here. Jonny, what's the best way for people to contact you or Wefunder?
Yeah, so I'll put my email in here, Jonny@wefunder.com. There's no H in Jonny. You can find me on LinkedIn very easily. At Twitter, I'm at Jonny C. Price. Mostly tweeting pictures of me and my 3-year-old son building Lego buildings while I was in house arrest with COVID in Abu Dhabi over the holidays, which was an interesting start to the year. But you know, sometimes tweet about Wefunder and investment crowdfunding stuff as well. But yeah, those are probably the best 2 places. And then if you are a founder, obviously feel free to email me, and I can have someone on my team reach out. Wefunder.com/raise is also a great place to get more info. And I saw someone earlier had mentioned in our FAQs, they found an answer to a question. So our FAQs and Wefunder right at the top of the page are really, really good information as well. So yeah, I hope there's some founders out there that might be interested in raising capital with us.
I did have one more question come in, more technical. Any advice about how to launch a new company to avoid overvaluation while going through a safe note?
Yeah, so I think I mean, really the valuation that you're raising on is your own kind of prerogative, right? You, as the founder, you're kind of the one that gets to set the valuation cap on the safe. And so you know, I would just recommend, you know, working with investors that know what they're doing, that you trust, that can help you kind of set the terms. And that will kind of ensure that, I think the bigger risk for a founder is that you undervalue the company, and you actually could have diluted yourself less by raising on a higher valuation. And so yeah, talk to experts like Hall, and you know, talk to investors who can help you, you know, arrive at terms and investment structure that works. And obviously we on the Wefunder team can help you think through that as well. I'm not sure if you kind of, maybe I missed that question, Hall, but
if we need to clarify that, go ahead and give us a explanation. I think you said thanks, so I think we did answer it. That sounds good. I did get a comment that the links in the chat are not clickable. So what we're going to do is pull that out, and we will put that in an email to everybody that attended today. So you have a way to get back in touch with Jonny. And so I think they wanted to repeat your email for reach out, and people just copy it down there. But like I say, we'll follow up. Everybody gets an email with Jonny's contact details, and you know, if you need anything else, we'll help facilitate calls with Wefunder, whatever way we need to do that as well. Any other questions before we go ahead and close it out, guys? You got just a few seconds here left. Jonny, any closing comments you'd like to make?
The only other thing I'd say is, you know, we're talking here mostly about the founder side, right? And potentially raising capital for your startup on Wefunder. The other really, really cool thing, we're trying to democratize angel investing, right? Anyone can be an angel investor now. You don't have to be a millionaire. You know, you don't have to have $25,000 to write a check. Anyone can be an angel investor for $100 on Wefunder. So we have hundreds of startups. Go to wefunder.com, check them out, and you can become an angel investor in a few minutes for $100 and give it a whirl. So also, yeah, if you're interested in raising capital with us, probably a really good idea to kind of give it a spin on the investor side, to kind of go through the checkout flow. So yeah, become an investor, as well as hopefully we can help you raise some capital.
Great. Last question was, will there be a replay? Yes, we did record it. When we send you the contact details, we'll include the recording, so you can replay this if you want, for everybody that joined today and those who were not able to make it. So one more question. To Jonny's point, before we launched the Wefunder, I became an investor to see the process from the other side. So that's a good point. You know, just get out there and be an investor and see what it's like for your investor, and what you like about deals, and what gets you to click. And that's the greatest lesson in how to make a good, successful campaign. I think we're closing out here. Okay, look, Jonny, I want to thank you for joining us today, sharing such great advice, a lot of good information in a short amount of time. Appreciate you sharing that with us. We'll make the contact details, so you get to follow up with these guys if you need with anything as well. No more questions. Anything else from you, Jonny?
No. This has been great. Thanks so much for having me, and thanks everyone for listening. Hopefully it was valuable for you.
It certainly was for me, and I think it was for the audience. We'll go ahead and close it now, guys. Thanks so much for joining us. Thanks, Johnny.
Bye, guys.
Bye-bye.